Okay, so let's understand the impact of the current event which has been stated in the problem. First of all, we will start with our basic accounting equation and then we will move forward with the problem. Okay, so asset minus liabilities equals to equity. So this is the basic accounting equation. First of all, I will give you a brief about what the accounting equation says. Let's say suppose we have a business of clothing or business of selling phones. So we have we are likely to receive $1,000 from a customer. Okay, $1,000 from a customer. As we have sold our inventory in terms of phone to the customer, so that we are likely to receive $1,000 in terms of asset. Okay, so the asset has the meaning that we are likely to receive the amount from the customer. Now in generating such assets, first of all we have bought the phones or bought some of the materials from our supplier to make the sale to the customer. So we have bought some material like assembly material or make the phone assembled before the selling to the customer. So we have generated the liabilities, like we have not paid amount to our supplier for which we have availed the benefit. So such liabilities, or we can say such amount that has not been paid yet. A liability is an amount which has not been paid off, for which we have availed the benefit. So it is $500. So what is the actual value of business, or we can say what is the actual takeaway from the business after paying off the liabilities from the assets? Okay, so $500, because after paying off the liabilities of 500, what we will have $500 in our hand. That will be our takeaway from the business. Okay, now let's move forward, that what type of items in assets and liabilities as well as in equity. Okay, why I have used different colors for different variables? There is a specific reason behind this. And what are the reasons? I will just explain to you. See, the assets are the amount, or we can say in form of a tangible asset, or we can say very specifically a machine, or any type of asset we can have for producing the benefit for the entity. Like in assets, what we for the current problem, very specifically, I will say the cash includes the item as the assets include the item as cash. You can note down these items like as the same account equation, and below them what I'm going to write. Okay, so accounts receivable. Okay, accounts receivable deposits with banks. If you have deposited your money with the bank, then eventually at any time in later future, what you are likely to receive that bank deposit from the banks. Why? Because that's your own money. So asset is typically classified into two items, which is actual owning. So cash you will own because you will have cash in your bank accounts, in your drawer, in your pocket. So in terms of business I'm talking right now. And accounts receivable is the amount which you are likely to receive. Okay. And deposits with the bank is also typically classified as the amount which you are likely to receive from the banks. Okay. So these are the mostly probably items which we will deal right now. Okay. And what in terms of liabilities? So I will make a distinction like this, so that it will be great to make a clear distinction. What item are comprised in which element? Okay, so in case of liabilities, we have short or long-term debt. Like short-term debt is a debt which has to be paid within a year, within 12 months we can say specifically, and more than that it will be classified as long-term debt. Here here it has the meaning of accounts receivable that we are, in case of assets, we are likely to receive amount from someone. But in case of liabilities, that is accounts payable. What are accounts payable? It it represents the amount actually which has to be paid to the supplier for which we have availed the benefit. Okay. Like deposits, or we can say advances, we have received from the customer. Because if, let's say, if a seller of phone has received advance from a customer, so there is also a liability for what? To supply the phone to that customer. And what will be the amount of that liability? The cost of the phone, because you have received an advance from a customer stating that the phone will be delivered in 2 weeks or as per the business requirements. Okay. So that is also your liability. So then it advance will be treated as liability. And equity, we will be mostly considering as of now capital, capital raised. Okay. We will discuss it in very very detail when we will face these terms. Okay. But as of now, capital raise, that capital raise is mostly used in terms of equity share capital, which is raised to finance the projects. Okay. Expand the business or financing day-to-day operations. Capital raised and retained earnings. And as a part of retained earnings, profit and loss. Profit and loss. Why profit and loss? As a matter of convention, as a matter of detailed level in the balance sheet classification rules, retained earnings, or we can say the part of equity, will also include the profit or loss generated during the year. Like you can see, when we will have a business. Okay. When we will have a business, whatever the profit or loss will be generated in the business, who will who will bear that loss, or who will avail the benefit of profit? Of course, the business entrepreneur who has started the business. So that is why the equity is related to the mostly to the business businessman. Okay, so that is why we have included the profit and loss amount in the retained earnings, which will be included in the equity part. Now let's come to our problem. It has been said, so let's form our the basic accounting questions so that we can answer our question. Okay, now what has been stated in the problem, like when the current month utility bill will be paid, so what type of impact will it have on the both sides of equation? This is the left hand side of the equation, this is the right hand side of the equation. Okay, so don't confuse with this like both side means assets or liabilities. No, that's not the meaning actually. These are like both sides of the equation. Like if we have a transaction that the current month utility bill is paid, so it will have impact on the two sides. Like this first one is this one, and second is this one. Okay, okay, so now if the current month utility bill will be paid, then first of all, if we are paying something, we will be reducing the cash from our assets, as we have seen in the this example. So the cash will be, the cash will be deducted in this case. Why? Because we are paying someone. Okay, now there is no relation to liability. Why that so? Because we have just incurred the utility bill in the current month, so we it is due in the month, it has to be paid, but it has not been outstanding. Okay, what is the meaning of outstanding? That, let's say, suppose if you have incurred the January, if you have incurred telephone expenses for the January month, and you have come forward to February month, but you still have not paid the month of January, so that will become a liability. But in case of the current case, it will not be a liability. So where the effect will go? The effect will go to the equity part. And in equity part, it will be most specifically related to the P&L part. And how P&L part, I will explain to you. See, in business, what we generally do, we have a motive to earn the profit. Okay, that's all. If you are incurring some expenses, you will have to pay it for very very sure. As of today or in later point in time, you will have to pay the expenses. If you will pay expenses, you will get your cash reduced. Okay, that's clearly total. So first effect of the transaction has been created, that on the left hand side on the asset, in the asset element. Okay, but it will also decrease your profit. Why that so? Because if you are incurring some expenses, it will obviously decrease your profit, right? If you will have, say, uh, like suppose you have earned revenue of $1,000, but you have not incurred any expense. That's, of course, it's like hypothetical, totally hypothetical. But if you will incur expenses, so it will decrease down your revenue too. Okay, that is why the profit will also decrease. Okay, to reflect that there will be double effect of the transaction. Okay, so what is the actual answer? We have a decline on the asset side. Okay, left hand side of the equation. Along with that, we have decline on the right hand side of the equation in the equity side. So we have derived our solution. But as a general rule, what we will have, please write it down to make sure that you will get to know about this concept later on too, when we will have much advanced problem. Okay, every financial transaction will always have double effect on accounting equation. Okay, just write it down because it is the rule we have just derived out of the current problem also. Now next we will write our choice. So what is the actual choice? Both side decrease. Okay, why that so? Because we have just seen twice that we are getting our asset side reduced by the amount that will be paid for the current month utility bill. Along with that, we will have our profit reduced to the level after incurring the after recording the expenses also. Okay, so the correct choice for problem 24 is B. Thank you.